First-time home buyers are riddled with fear due to rising interest rates. When I look at an interest rate with a 7 handle, even though prices have come down, my monthly payment is still high. So my alternative is renting. That's what I want to talk about today. And that's it. First-time home buyers benefits, whether it's programs or opportunities. What does a first-time home buyer today have that they haven't had for the last 2 years and might not have next year? Because think about this. We still have more transactions happening than we did in 2012 to 2020. And the reason we have more transactions is because we have more buyers of home buying age. The largest age group today is 31 years old. That's not going to go away just because interest rates are high or because we're headed into a recession. It will slow down, things will shift, but the demand is still there. Next year, when we go into a recession, interest rates will drop. Now the question is from what to what, which is why I don't love ARMs and why I love the 3-2-1 buy down that we have. We're going to talk about that in a minute. But interest rates are going to go down and opportunities to refinance will be possible. Now, don't buy beyond what you can afford today, because if they don't, I don't want to promise something I cannot guarantee. But this is what happens when we go into recessions. Of all the recessions outside of one, when recessions happen, interest rates went down, home values went up. We will gain equity, home prices will rebound, and we will see opportunity to refinance next year. And those home buyers who are sitting on the sidelines waiting for prices to drop further are going to miss their timing of the market. Trying to time the market is a fool's game. I get it. I don't want to buy at the top. I don't want to buy at interest rates this high. I want to go through a series of programs, loan programs that are available to you as a first-time home buyer, as well as the opportunities that you have from a market that's shifting from an extremely hot seller's market. Here is our opportunities, given the fact that it is a softening market. It's not even a buyer's market. We don't have enough inventory for it to be a buyer's market. We still have less inventory than we had in 2019. Yet, we have sellers who absolutely want to sell, and they're going to take advantage of providing you some of these opportunities that I'm going to talk about today to get their home to sell. So let's go through the loan programs first, then the opportunities. All right, if you are a veteran, I cannot say this strongly enough, you have by far the best loan program on the planet. The VA loan with 0 down, low interest rates, no mortgage insurance is by far the most stellar opportunity to get into a home. If you are a veteran, you should be exercising that option right now because you haven't had it for the last 2 years because it was so intense. Sellers didn't want to sell to a VA buyer. And next year, second half of next year, when this market turns, you will be shut out again. Now is your window between now and next late spring. And I will tell you right now, less buyers are out. So you have even more negotiating opportunity as a veteran. And you can assume somebody else's VA loan. A VA loan is assumable, just like a USDA and an FHA loan. And we talked about that on a different video. But a VA assumable loan, you as a veteran can take that risk away from the seller and absorb their interest rate on the loan that they have today, but you have to bring the difference. If you're non-veteran, you can still purchase a VA assumable loan, but the seller will be still tied to that loan. So many sellers won't want to do that because their eligibility will still be tied to that loan, and they want to free that up for their next purchase. So if you're a veteran, you should be on the hunt for VA assumable loans or opportunities to get in this market. I've had several real estate agents reach out to me knowing that they could search the market on the words VA assumable and finding homes in this market right now where sellers are willing to negotiate and they have assumable loans. If you have not talked to your real estate agent about that, you absolutely need to, and we need to sit down and talk. All right, USDA. Everybody talks about the fact that it's too far, and it kind of is. It's outside of the Denver market, but the USDA is the way for the non-veteran to get in with zero money down. Now, you're going to have an upfront fee, but the monthly mortgage insurance is lower than any other program. So the USDA loan is a fabulous program to bring families out to rural areas to buy single-family homes with no money down. Now, it has income restrictions. You cannot have 20% down in a savings account. It's helping buyers buy when they otherwise couldn't. And it can't be income producing. It can't be a multi-unit. It can't have exterior buildings. There are restrictions with the USDA loan. They're not trying to fund, say, farm loans or agriculture. They're trying to build up single-family home ownership in rural areas. So, but really quickly, I want to list off these towns that maybe you didn't realize are a little closer than you thought. So in the South, you've got Elizabeth, Kiowa, Perry Park, all USDA eligible. In the East, Bennett, Strasburg. In the West, Genesee, Evergreen, Conifer. Did you know that you could buy in Conifer with a USDA loan? In the North, Fort Lupton, Firestone, Frederick, Erie. All opportunities to be a little bit outside the metro and put zero money down. If you want to find out if you are eligible, there's also a USDA map and a USDA income limits. You can Google that, quickly see the map of the areas that you can start looking for a home, and then you can give us a call, talk to us about the loan parameters. All right, down payment assistance. This is a tool that has been underutilized for the last several years. And the reason why is because sellers weren't accepting it. They didn't have to. Buyers were coming in with cash or 20%, 30%, 50% down. Sellers were looking for a conventional or a cash buyer with more money down. Down payment assistance is for those home buyers looking to expand their opportunity to financial wealth and health through real estate. It is an opportunity to get in when you might not otherwise do so. Now, I will say, with a word of caution, if you are using a down payment assistance program and putting no money down, or the USDA or the VA, and we see slight pullback still on our home values, when you buy a home, it could be that the value of that home goes down slightly before it picks back up again. But I really want to put pressure on this because everybody's afraid to buy at the top. We are a very, very strong market. We have less inventory than we had in 2019. We have this largest age group of 31-year-olds. We have a very strong economy, especially here in the Denver market, but nationwide. Our job openings, our job growth, our wage growth are all going to support us going into this recession. Those people that will be hurt most are renters. Those people who are homeowners have a lot of equity, plus the investors who own homes, own real estate, will continue to elevate the real estate market, allowing it to stabilize more quickly as soon as we go through this inevitable cycle. And that's really important that you hold on to that because you only lose money if you sell. You only lose money if you sell. So if you buy right now, and I'm going to keep talking about the benefits, if you buy right now and that home value dips slightly, you only lost if you sell. Otherwise, it will rebound, home values will come back up, and they will continue to go up because ultimately real estate always goes up. It's just going to have to go through this slight dip, and nobody is expecting negative equity. What we're seeing is a pullback from all the positive equity and the gains that we saw in the last 2 years. So even if it flattens out and you purchase today, it's going to feel like you're losing a little bit of value, but then that's going to ride because everybody's expecting that as interest rates come down, just even slightly, they don't have to come down to 2 or 3, and I pray they don't. 5.5 is a fabulous interest rate long term, and we will see more buyers come in and home prices go back up again. But I will say that make sure your job is secure, that you feel confident, that you have the financial health of going into home ownership, and that you don't overexpose yourself with a payment that's too high on the promise of interest rates going down, right? I want to tell you that interest rates are going down, but I don't want to lie. I think they will. Recessions are coming. Interest rates always drop during recessions. I feel strongly that it will happen, but I would never want someone to buy on the promise of something that anyone, no one, can actually deliver on. It is an economic result of where we're headed that interest rates will drop. No singular person, well, Powell has a little bit to do with it, right? But can drop the interest rates. So buy within your means. Make sure that you're financially healthy. Make sure that your job is secure. And then take advantage of getting in and locking down your monthly payment and stop getting rent increases. All right, so down payment assistance. That was my word of warning. Down payment assistance. You can get in with very little, if no money down. Many of the down payment assistance programs require, say, $1,000 minimum. Some of them don't. Getting in, they've got grants, they've got silent seconds. But did you know we have a social equity program that you can partner with down payment assistance? If you lived or have a relative who lived in a red line area between the years of 1938 and 2000, you qualify for either $15,000 or $25,000 social equity, and this is a grant. This grant, if you make under $94,000, is $15,000. If you make over $94,000 in income, it's $25,000. You need to know how this works. We have it. We've been supporting our clients with this. And you can partner with down payment assistance. We also have other down payment assistance programs that, as I mentioned, that are either silent seconds, meaning you'll pay them off when you sell, right, way down the road, or if you refinance, or they're grants and you have to live there for a period of time, anywhere from 3 to 5 years, depending on the program. But you can also stack them depending on your income, which would be really hard to qualify for all of the programs here in Denver. But did you know we're licensed in all 50 states and 3 territories? There are markets where you can stack down payment assistance programs and get opportunities that you might not otherwise have. And certainly if you're looking to buy in one of the less pricey areas, even in the Denver market, we can look towards that as well. Also, Home Possible has a 5% down program on multi-units. You can buy a 2, 3, or 4 unit property as long as you're going to live in one of the units with as little as 5% down if your income is less than 80% of the area median income. Now, here in the Denver market, there used to be an opportunity that as long as you were in one of the areas that were underserved, then it didn't matter what your income was. And we used to use that a lot with our first-time home buyers, getting into a multi-unit with as little as 5% down on a conventional loan. Home Possible is a Freddie Mac loan. In the Denver market, it got very hard to qualify based on the income requirement, the 80%. So we would look for those underserved areas and we would purchase multi-units in those areas. Well, Freddie Mac did away with focusing on or excluding those areas from the income requirements. And they just said you have to fall within the income requirements. Again, we're licensed in all 50 states. We have this Home Possible program with 5% down, purchasing a multi-unit happening right now with one of our real estate partners in Minnesota. This is an option that you should be looking at if you're buying outside of the metro where your income can actually qualify you for a multi-unit. Again, give us a call. We know all the details. So first-time home buyer programs are abundant. And right now, they're accessible. They weren't for the last 2 years. Getting in and then locking in an interest rate on a 30-year fixed, and then knowing that when and if interest rates drop, you have the opportunity to get a lower interest rate, right? And even a lower monthly payment. So now let's go to some of the seller opportunities that a buyer has today given this market. So this was about loan programs. Now let's talk about market opportunities, because this is the gold in this market. In fact, I want my 2 oldest sons, and if you're out there and you're a real estate agent and you have a house, we're keeping our eyes open. So my 2 boys are looking at purchasing a primary home together. And I say this because I'm still buying. I'm still helping my kids purchase because right now I know that those two boys can buy a home that, yes, will have a higher interest rate today, but they'll be able to negotiate and take advantage of these opportunities in this market that they won't have when the market gets hot again, when interest rates drop. And I also know specifically the Denver Metro is getting expensive. It's getting expensive. And as a mom, I want my kids to have real estate in my area. I want them to be able to live near me for the rest of their lives. And how do I do that? I take advantage of that today. And if you're a mom and you've got kids who are college age or older and you want to help them purchase real estate, now is the time, and I want to help you do it. So let's talk about that. So opportunities. Right now, you can negotiate price. Now, I'll tell you, if the right home on the right street at the right price, staged well, comes on the market, it will still get multiple bids and go for at or over asking. It just is. Good homes are hard to find. A lot of sellers are holding onto their homes with their very low interest rates and their very low payments, and they're either turning them into rentals or they're just staying put for the moment. A very good home, that home that you've been dreaming about and looking for, when it comes on the market, other people will want it too. Now, we're not seeing 50 showings and 20 offers. We're seeing 20 showings and 2 or 3 offers. But all you need is 2 to have a multiple offer situation and go over asking. So if you're a first-time home buyer, you might want to look for that home that needs a little love and care. Then you can get a discount on the price. You might be able to get, and I'm seeing it, $20,000, $40,000, $50,000 off asking, especially if it needs some upkeep or maintenance. And we have renovation loans and rehab loans. All of those loan programs, fantastic for somebody to get into who can't get into a multiple bid scenario. Now, I didn't bring that up with the programs a minute ago because first-time homebuyers can get quickly overwhelmed with a renovation loan. But it is, if you've got the wherewithal and the contractor contacts, it's an opportunity to get in. So a reduced price. Reduced prices also mean reduced property taxes. So yes, your interest rate is going up, but your property taxes are coming down. Your price is coming down. And then when interest rates go down, your monthly payment will go down with a refinance. Now, of course, we're offering no lender fee refinances through the end of 2024 because I feel confident that the recession will happen and interest rates will go down probably the second half of next year and certainly by the spring of 2024. I feel confident that the mortgage market will sustain and support those clients who are getting in today with better opportunities. But I refuse to hang my hat on marrying the house and dating the rate because I never want to promise something I can't personally deliver, but secure you with the opportunities that I know that we're going to back what we say and give you and provide you a certificate for no lender fees should you buy today. So lower price, lower property taxes, seller credits. So throw away the 7% and get a 4% interest rate. You can save hundreds, if not over $1,000 a month by dropping your mortgage interest rate by 3%. And the Rueth team is one of the few lenders. Not every lender has it. A lot of lenders have the 2-1 buy down, but not very many lenders have the 3-2-1 buy down. So we have that, making sure that you're getting the absolute rate because the probability that the rates are going to go down in the next 2 to 3 years is extremely high. This is how you lock that in. Don't do 7, do 4. The second year, don't do 7, do 5. The third year, don't do 7, do 6. And then it's locked in at a 7% for the rest of the 30-year term. But that lower payment could put you in a position that either 1, lets your job income increase, 1, lets you absorb or pay off or get student loans, right, waived, or puts you in a position where you can then refinance without putting you into risk of an ARM, an adjustable rate mortgage. So those seller buy downs are key. We're helping a lot of our listing agents put together flyers and marketing materials to support the information of bringing those buyers in, letting them know that this seller is very interested in doing this. And I would venture to guess, even if a seller doesn't say that they're willing to do a 3-2-1 buy down or a 2-1 buy down, more than likely they are, and that you just have to ask the right questions. All right, you're also getting inspection items, either fixed or credited. The last 2 years, it was buyer beware. Buyers were waiving inspection. Buyers were waiving any appraisal, whether it came in low, they would just eat it. Buyers were waiving all the objections just to get into a house. Now you can take your time. You can make sure it's a house that either is or can be made into the home of your dreams. Now you can get those inspection items repaired. Now you can get that price dropped and get your property taxes dropped. Opportunities exist that haven't and won't exist again, right? This is your time. Don't sit on the sidelines trying to time the market, because while you're trying to time the market is going to go past and we're going to see more demand and we're going to see prices going back up again. You also have the best hedge against inflation. You have a fixed mortgage payment. This is alone one of the most brilliant things, because if your fixed mortgage payment is anywhere near your rent payment, you know that you have a forced savings plan because you have principal reduction every single month. You have a payment that's not moving compared to this rent, which you get nothing for it. You'll be lucky if you get your security deposit back, and that rent over time will continue to go up. It's going up more slowly right now as home prices are decelerating, but it will continue to go up. This is not going anywhere. This is your hedge against inflation. And right now, with inflation higher than our interest rates, which is hard to believe, it's actually making you money. All right. Inventory is low. Inventory will continue to keep home prices stable. Interest rates will drop once we hit a recession. Opportunities and those demographics are going to come out. First-time home buyers, your time is now. Don't sit on the sidelines waiting, trying to time the market, because those people sitting on the sidelines 2 years ago, watching the pandemic, wanting to time a down market, well, they lost the best ownership opportunity that we've ever seen. I don't know what the next 2 years are going to shape up to, but I do know that if Powell keeps doing what he's doing and we enter into a recession and people stop spending and people lose their jobs, we will see inflation drop. Mortgage interest rates, long-term mortgage interest rates are tied to inflation. We'll see mortgage rates drop. We'll see prices stabilize and then go back up again as the demand returns. This is your time. And I would love to go to work for you. Our team loves helping our clients build wealth through real estate because we know this is the opportunity many don't have in any other way. Nicole Rueth with the Rueth team. I hope you guys have a fantastic rest of your Tuesday week. Know that we're here to serve, and I hope to talk to you soon.